Good afternoon, this is Christian Thwaites from Brown Janikowski, Friday, January the 22nd. Well, a better week in the market than we've had the last couple of weeks. We had some bullish comments from the head of the European Central Bank yesterday, Thursday, which led to a bit of rally in most equity markets, including the US, which carried over into today, Friday. So it was nice to see those further easing policies likely going on for at least another few months. We've also seen that the long Treasury bonds are up 4% so far this year, which is kind of a nice counterbalance to what we've been seeing in some of the weakness in the emerging markets and elsewhere, which is also comes back to the oil and China story. But let's take a longer look at emerging markets, and I want to show you some of the growth that the emerging markets have had over the last 35 years relative to developed markets. So this chart shows what the growth rate of the major advanced economies, the G7, showing the blue dot, and the emerging market and developing countries shown in the red dot, as they were in about 1980, where the G7 were growing at about 1% and the emerging market at about 4%. So let's see what happens over the next 35 years. And every time the red emerging markets is up and to the right of the blue, we're seeing faster growth in the emerging markets. It really begins to take off for emerging markets in the late 1990s. This is when they begin to move right up and to the right, growing much faster than the G7. There's a big correction in 2009. You see the big blue dot in the bottom left-hand corner. And you can see right now we're settling into about where we are now, where emerging markets are growing at approximately 6.5%, between 5 and 6.5%, compared to the G7 economies are growing at about 2%. So this really underlies some of the reasons why we like emerging markets. They've never had in this period a time when they've gone into big negative growth. That's really been reserved for the G7 countries. So we're now looking at emerging opportunities in emerging market and taking a long-term optimistic approach to what we see there. So we're expecting better markets next week. We have the Fed talking for the first time in about a week, and we'll update you on things then. Thank you very much.